It took 5, 6, 7, 8 conversations for a woman to write a check than it did for their male counterparts. And that's a real problem. And we have to call it out, not from a shaming perspective, but from a women need to stand up and take bigger risks and bigger swings and write bigger checks as well.
This is the Angel Next Door podcast, where we will talk about all things angel investing. What it is, who does it, how do we find them, what does it mean to invest in an early stage company? If you have ever wondered how you can affect the change you want to see in the world, then tune in to learn more. Laurel, welcome back to the Angel Next Door podcast. I'm so excited for you to give us an update on everything that's happening at Fabric VC.
Thank you so much for having me back. It's exciting to be here.
No, and you just closed Fund 1. So exciting. So now you have some capital to deploy, and we want to hear all about the different types of companies you're looking at. And also, I would love for you to tell us a little bit more about the fundraising process. But to start us off, give us a little bit about Fabric VC and who you are. Just remind everybody. We're going to link in the show notes to the first episode.
Sure. So Fabric VC is my first vehicle. It's a spinoff of my marketing agency, Elevate, that's been around 17 years, 400 plus brands later. Before that, I was a corporate M&A attorney, took over family business super young, sold that. But because of that background, a lot of private equity and venture firms were coming to us to market them. And that's really how Fabric came to be. One of the GP clients said, "You're better at this than we are. You have this amazing early deal flow, this marketing special sauce, and this commitment to diversity. Go launch a fund." And I was just a little crazy enough to do that. So that's what we've done.
I love it. Okay, so you just closed Fund 1, so we're allowed to talk about it, which is cool. And so tell us, how much did you raise? What type of companies you're going to be deploying the capital in?
Yeah, we did just under 8 million, and we've actually already deployed most of that capital. So we did what's called a rolling raise, rolling deploy. As a Fund 1 and a female GP, I felt very strongly that I needed to build the plane while I was flying it. And it's doing two jobs, let's be frank. It was really hard, but I think it was really worthwhile to speak to what we were actually doing, not what we were theoretically going to invest in. I also felt very strongly about writing checks last year because the valuations were finally normalizing and we were able to capture so much value for our dollar. So I felt like there were those two factors, which is why we did the rolling raise, rolling deploy. And I'm hoping that my left eye will stop twitching any day now from doing it.
Oh my gosh, I love that. That's so great. That's such a smart way to do it. So give us an example of a couple types of companies that you invested in along the way.
Sure. So we focus on consumer tech, health tech, and fintech. 8 of our current 23 portfolio companies are in the healthcare space, specifically femtech, although I hate that word. We don't call it the other thing for men. So we've done quite a bit in menopause, longevity, fertility. We have a lot in the consumer tech space, which I know very well from the marketing agency side of the fence. We're just thrilled they're all our children, of course, but I'm very proud to say that in the last 18 months, we've have over a 30% graduation rate to Series A, which is pretty unheard of.
Wow, that is incredible. That's like the hardest hurdle, right? For women to get from the pre-seed seed era and actually graduate into Series A.
Yeah, and that was part of our thesis as well, was being the last checks in on the round. I hope that people saw that I didn't have an ego about being a first-time GP, and in fact, felt quite the opposite. And so we did most of the checks we wrote were last checks in or oversubscribed rounds, really following the coattails of smart VCs that had done this many years before us. And I thought that was also, aside from the marketing layer of diligence that we do, something that didn't necessarily differentiate us, but it made us smarter in terms of how we approached our investment thesis.
And so that way, more of your portfolio could actually get to that Series A.
Correct.
Nice. Correct.
You got to prove it early, right?
Yes, exactly. Can you give us some examples of what some of the companies do?
Sure. They're all my children, so let's say, who I want to talk about. So I'll talk about our first check ever that we wrote was to a company called Cadence, keepyourcadence.com. They're these little pods that you put your cream and jewelry and serums and pills in for travel. So very much a consumer play, but then they magnetically attach and magnetically label. So they have this very interesting IP protectable moat around it. And that's really what we want to see in the consumer plays, because consumer, while I love it on the agency side, it's really hard to see a lot of these companies scaling to that $100 million revenue rate so that they can be targets for some sort of M&A activity. I think consumer as a whole is really splintered. So that's an example of a company that has that tech moat around it. They did their Series A. We came in as a kind of a strategic because they needed some support and introductions to big box retailers. So we introduced them to the team at REI. They got introduced to the Container Store, and then they wanted to do some pop-up their first or second year. And so we did some introductions to our real estate partners so they could do pop-ups for holidays. So that was a really fun experience. And it was nice to have something that you could actually like touch and feel as a product, because so much of what we invest in is our platforms as well.
And tell us the URL so that we can go check them out.
Keepyourcadence.com.
Okay, because we'll put that in the show notes.
There you go. Yeah, so that's an
I know.
example of a cool one. And then we've got so much in the health space and longevity space with a company called the Menopause, which is focused on building platforms for women's health, specifically in menopause, and products to support our health. Because I know you know this, but it's just shocking how few dollars went towards women's health, even though we're 50% of the population. So we're now starting to see that pendulum finally swinging back. And I think there's a lot of opportunity in that space.
Yeah, so tell us a little bit more about that. So you are actually starting to see more dollars go to women's health companies.
We are. Yeah, I think that we're starting to see more female GPs. So that pendulum is starting to swing a little. And because of that, women have a tendency to invest, as men used to, in things that we know and want to see thrive and survive. So women's health has been at the forefront for me, particularly. I'm like perimenopause and starting to go into that world. And that's something that I want to make sure women after us don't have to deal with.
Yes. Yeah, that would be great. I tell all my friends, I'm like, when you get there, call me.
Yeah, let me know. Let me know what's working.
Let me know. We can talk about it. Yes, because my mom never talked about it. I don't think she ever talked about it with her friends, with anybody. I barely knew I was living with her. I didn't realize that she was having hot flashes or couldn't sleep at night or any of those things. Just wasn't
I knew
talking
about the hot flashes. My mom had one of those, I think it's a USB, plug into her phone that had a little fan that goes. So she would be on her phone talking about FaceTime and have the fan.
I'm like, oh, that's awesome.
It was a pretty funny product. Yeah.
So good. Okay, so tell us a little bit about the fundraising journey. What were some of the highs? What were some of the lows?
I think, honestly, more lows than highs, if I'm being totally honest. This was a very challenging fundraising environment. I'm not one to back down from a challenge. So my thought process was, if I can build this in this environment, when we go out to raise our next fund, which we'll be doing shortly, at a 10x, we'll be able to do that with more efficiency. But it was really hard. We had to have way more conversations than I ever thought humanly possible. I was doing 18 meeting days, 18 meetings a day, 20 minutes each, and then 2 or 3 events a night. I was in hard, aggressive hustle mode for the last 2 years. And so now my cortisol levels are trying to rebalance, and like my body is in this very interesting state of readjusting to what life should be, which is not bad. And I think some of the good is we had some women and men who really showed up and wrote checks and really supported us. Our LP base has been fantastic. We have a 70% diverse LP base. And in every major city that we fundraised in, our LPs hosted incredible events to support those efforts. And so I would say once we got more women into writing checks, the ones that did really showed up. And that was very meaningful for us.
That's awesome. And then, so what are some of the ways, I know you encountered some challenges in talking, especially with women or even people that have never invested in this asset class before, but what are some of your thoughts around how do we make this easier? How do we get the mindset to shift?
I think there's a lot of education that needs to happen. And I did so much of that. I called it the work in the work, right? Educating and empowering women, and specifically women of color, to have a seat at this table. But there's still so much work that needs to be done. I think we were talking in the pre-call about it took 5, 6, 7, 8 conversations for a woman to write a check than it did for their male counterparts. And that's a real problem. And we have to call it out, not from a shaming perspective, but from a women need to stand up and take bigger risks and bigger swings and write bigger checks as well. Like the size of the scale of the checks was also tended to be smaller from women. And I think it's just a factor of us, again, not having access to capital or credit until the 70s. And we're on, again, this really interesting pendulum swing as this great wealth transfer is happening. But I think I just want to encourage women to show up in bolder ways. It's been amazing, those that have shown up, and it's been disappointing to see how some are like so excited, waste your time, never write a check, never were going to write a check. I think that women need to be supportive and bolder and just get in the game. Like, they're all not going to all be winners. Things are going to fail. That's how life is. But I think the saying is closed mouths don't get fed. Open your mouth, try a different asset class, and hopefully you can pick some winners.
Yeah, I found that I had a lot of women that were really interested. Like, I think they were more curious than they
Sure.
were interested in necessarily writing a check, but they were just so excited that somebody was actually out there raising money to try to help women, and they thought it was such a great idea. I'm like, okay, then why won't you actually write a check?
And that's the gap.
Get
Yeah.
behind it. And yes, that is definitely where I find that too, which is why I'm keep writing books. Hopefully that helps. I don't know, but anything that
It
we
does. Every little bit helps. And we've
every
just got to be louder. And frankly, I've been called aggressive a lot of times, and I'm fine with that. I think we need to be aggressively optimistic about putting women's wealth and money to work. And I think we still have long way to go.
yeah, for sure. Well, I'm excited that you're hearing or actually seeing that there's more going on in women's health. What was it, 1993, that they actually decided to have women included in clinical trials.
Yeah.
Like,
Shocking.
so
Go figure.
so many things, right? But this whole mindset is so interesting because like women couldn't even get a credit card in their own name until 1974. In some ways, I think, okay, yeah, it's not women's fault, it's not men's fault, it's nobody's fault. Okay, this is just like our society. This is how it is. But we do have opportunities now. And I'm really worried that we are modeling behavior, or there are some women who are modeling behavior that will actually hurt the next generation.
I don't think you're wrong with that. One of the sadder stories I would say during my fundraising journey is there was a woman out of New York who she would come to every event. She would set calls with me every month or two. She happened to be a billionaire and she never wrote a check. She just kept pulling me in, wasting my time clearly. And part of me, when that happened, and we were like, we're final close, like you've been on long this journey. Are we doing this or not? And she totally ghosted. Part of me wanted to call her out on it and say, this is the problem. You are the problem. And then the rest of me was like, you know what? It's not my responsibility. She knows what she did and what she didn't do. So it's challenging, especially with a woman like that who literally could have written a check to close the entire fund.
Right. Yeah, I was just talking to somebody the other day who said, oh, I was pitching someone who like that had a considerable amount of wealth. And at the end of the day, because the investment really wouldn't have made much of a difference, like I don't think in their own situation, I think they were just like, oh, that's the big deal, or why bother? But they don't realize, like, even that small amount, getting female GPs to be able to raise $8 million is amazing. That is extremely hard. Even getting to $1 million is extremely hard. 8 million is incredible. But getting women to be able to raise 50 million, 100 million, and $1 billion, like we need to get to that level too. And I think that the only way to do that, obviously through institutions helps, but when we have the wealth and people who are writing checks to philanthropy that are relatively large, like why can't they do that for GPs?
Well, thank God for the DAF, right? That's an approach I think has worked for a lot of folks. We've had some LPs come in through 401k and Roth money. So that's been another interesting avenue. So I think we're trying to figure out all the different paths to profitability on that. But yeah, just think that was an age gap issue. And I just think that particular woman couldn't see her nose to spite her face and see the impact that she could have had. And I think, unfortunately, a lot of women with money just want to be in the mix, but they're still afraid to take a big swing. I'm not complaining. I'm happy and I'm so proud of what we built. But I just want to make sure that when I'm on any podcast or any platform that I'm calling it out. So hopefully it resonates with one or two women and they say to themselves, you know what, I have been talking to this GP. I thought I was going to write $100,000 check. Really, I should write a 250. Or maybe I should just say yes, even though we've had 3 conversations, it's time to say yes. So if I can just truncate that time from first point of contact to close of LP commitment, then I will feel like I've done my job.
Okay, so first of all, I think it's amazing that you took money through IRA 401k and then also donor advised funds, because that's something that I talk about a lot. I have both of those methods of investing in my first book, Do Good While Doing Well. But I've especially been very vocal about trying to get more women, especially, to learn about investing using philanthropic capital, considering I think that's where they are. That's where we're meeting them, right? So meet them where they are. And so tell me a little bit more about how you did that with the donor advised funds.
Yeah, there's a bunch of different third-party platforms that make it seamless. So someone says, I've never written a check before. I love what you're doing. I've really been spending more of my dollars in philanthropy. The next conversation is, great, we can make that work, right? Like it's fitting it into any box you can. And so that's what we did. And especially again, as a fund one, we kept hearing that a lot and the bells were going off. And I was like, I got to figure this out. I got to figure out a way to make that make sense. And so we hired a third party. I believe the company's called Lagos, I want to say. I'm blanking on the name, but it was so easy. It was so easy. They literally just set up I think it was an LLC to pass through the dollars and it was done. It was pretty easy. It was basically just a lot of DocuSigns.
Oh, that's great. Yeah, just in a lot of cases we know there are hundreds of billions of dollars sitting in donor advised funds that are maybe in a mutual fund, or who knows what they're invested in, whatever the financial planner's thinking about at the time. But to be able to use that and use it for good, to actually put to work toward investing in women-led companies, but also, of course, in women-led funds.
Yeah. Well, like you said, if that's where they are, then we have to meet them where they are, period.
Yeah. Well, it's so refreshing that you came back with such a great story of what happened with Fabric VC Fund 1. And I can't wait for you to come back and tell us all about Fund 2 and Fund 3 and all of the amazing things and the difference that you're making in the world. Laurel, thank you so much for coming back to give us this update. And we look forward to what happens in the future. And we'll make sure everybody knows how to get in touch with you.
Thanks so much, Marcia. You're such a great champion for us. Really appreciate it.
Thanks for listening. To connect with me, visit my website at marciadawood.com. And please subscribe, follow, and leave a review. It helps the podcast get seen by more people. And remember, you can also find the Angel Next Door podcast on YouTube too. And if you're looking to learn more about investing in the changes you want to see in the world, sign up for Ann and Bill Payne's ACA Angel University classes. Go to theangelcapitalassociation.org, all one word, to find out the schedule. And classes are now available on demand. Many classes are offered, everything from angel investing basics, which include fundamentals, risk, due diligence, term sheets, valuations, returns and portfolio strategy, and even a class on group formation. There's even a deeper dive where you can get advanced classes, including capitalization tables, startup boards, and exit strategies. If you're not already a member of the Angel Capital Association, you can become one for a low price that will give you unparalleled access to discounts, free webinars with a huge archive of content, networking opportunities, and much more. We'd love to have you join us. All content for this website is informational and not intended to serve as legal, tax, accounting, or investing advice. Well, Marcia, that's me, does serve on the SEC Small Business Capital Formation Advisory Committee. My views are my own and not the views of the SEC or my fellow colleagues on the committee. Our speakers and hosts are thoughtfully selected for their educational value, but their opinions are their own and do not necessarily represent the views of the host, me, or the Angel Capital Association, and neither specifically endorse the use of presenters' products or services. Listeners of the podcast should consult their own tax, investing, legal, or accounting advisors before making important financial decisions. All warranties, including accuracy, completeness, and suitability for specific purpose, are disclaimed.